Hey everyone, it's Joe Bladek here today, and my name is Joe, and this is my guest interest rate. She is my predictor of interest rates today on the live broadcasted Bank of Canada program today. We're going to be talking about which way interest rates are going today. There's a big, exciting announcement today. Today is the final interest rate announcement for the Bank of Canada for 2025, and I'm pretty excited. It's going to be a great episode, and we're going to just dive in a moment. But before I do that, let me tell you a little bit about why interest rate is here today joining us. I have her on camera, and as you can see, she's my guinea pig pet. She's been with me for most of the Bank of Canada announcements we do here on Canadian Mortgage Weekly Live, and she predicts the interest rate, whether we're going up today or down or we're remaining steady. So before we take a look at what the announcement is, because that is coming out in about 14 more minutes, the Bank of Canada will be announcing that at 9:45 a.m. We're going to take a look at some of the news articles. What's the news been saying? We're going to be taking a look at what the bond yield has been up to, what the 4-year swap rate has been up to, and what clients have been saying and what the lenders have been saying. So let's dive into that before we get into the actual data and the what's actually happening today. First thing we're going to do is just to say hi again to interest rate. How you doing? Now, we did miss last interest rate announcement here on Canadian Mortgage Weekly, the one on October 25th. On that announcement, we did see rates fall by a quarter point, which was pretty excited. All right, she's just hanging out in there, having a good time in her little house. All right, so what's been happening in the news? Well, one of the biggest items that I've seen is that there has been a huge change in unemployment. And there's a big reason why I think that is an important item to consider today on Canadian Mortgage Weekly, because unemployment rates and how they relate, and they are actually closely related to the Bank of Canada interest rate decisions. All right, so I'm just loading that up here, and I'll just share with you what's been happening with the unemployment rate, because it's pretty crazy. Because over the last few months, we've actually seen unemployment rising, and it pretty much hit 7%, 7.1% in September. So that was a huge number. We hadn't seen 7+% in a number of years. So with it hitting 7.1%, a lot of economists were thinking that the Bank of Canada does need to cut rates pretty significantly going into the future. However, what did we see announced just a few weeks ago? Well, unemployment dropped fairly considerably. Unemployment rate did drop from a high of 7.1% in September to a rate of 6.5% in November. So that was a big drop in unemployment. Canada did add a number of jobs. That's really good news for the Canadian economy. However, are these jobs going to be permanent jobs? We added 54,000 jobs in November. Unemployment rates did fall, and I think that these jobs might be temporary jobs. They could be jobs that are just for the holiday season, just to get through Black Friday, Christmas, all the holidays, the New Year's. They could be temporary jobs. So we'll have to see how these numbers play into the new year, February, March. Do these numbers still stick? Do we still have a lower unemployment? Because we did hit 7.1% in September, and that was a large number. Hadn't seen that number in a long time. So Just if you're just joining me now, my name is Joe Bladek. I'm the host of today's live Canadian Mortgage Weekly podcast, and this is my sidekick. Her name is Interest Rate. She's just hanging out. She's going to try to predict the interest rates later. I'm going to show her some hay. I'm going to show her some lettuce. And we're going to see which one she goes with, and we'll see what she predicts in terms of rates going up, staying steady, or remaining or remaining with the downward trend we've been seeing for the last number of rate announcements. All right, so with that unemployment rate coming in a lot lower in November, we did also see the bond yield react very boldly to these news announcements because it's closely related as well. And I follow the Canadian bond yield because I'm a mortgage nerd, and I follow this trend to see what's happening with fixed rates. And it helps me get my clients into the best product. As a mortgage broker across Ontario, I work with clients from Windsor to Ottawa and from Toronto to North Bay and anywhere in between. And with that, I'm able to follow this bond yield to see exactly where rates are headed. And as soon as those unemployment numbers came out just a few weeks ago, we saw the bond yield spike hard. Then it faltered just for a bit, and then it continues to spike even further. The bond yield hit a low of 2.79% in October 20th. And since then, it's now sitting at 3.03% as of this morning. And fixed rates are tied to that. And what I saw almost immediately when the bond yield started spiking are lenders raising fixed interest rates. And they started raising fixed interest rates pretty much days after the bond yield went up. So what do I do in cases like that? As a mortgage broker, I try to get my clients to secure their fixed interest rates before they go up. And we were able to do that for some of our clients. We got them set into a refinance rate, locked in, and then this was before interest rates went up. Oh, she is squeaking. That means she's getting hungry. She's going to be eating something, whether that's hay or lettuce. This is my sidekick, Interest Rate. She's here today to join me on my live Bank of Canada interest rate announcement. She's just hanging out, having a good time in there. All right, Interest Rate, you're doing all right, okay? Perfect. She's just hanging out here on my desk. So the bond yield has gone up, indicating that the market thinks that interest rates are actually going to continue to either stay the same or go higher. Unemployment went down, which does influence rates to stay the same or go higher. So that's kind of the main two things that we've been seeing. The last rate announcement did show a rate cut of 25 basis points. Let's take a look at what the 4-year swap rate is doing. And the reason why I want to take a look at the 4-year swap rate is because that's a good predictor as where rates are going to be about a year from now. So let's take a look at that here now. I check a website called Mortgage Logic News for this information. It's run by a colleague in the mortgage industry, and let's take a look at what it's saying. Okay, the 4-year swap rate sitting at 2.78%. That's actually higher than from the last rate announcement. We saw rates as low as 2.6% from the last rate announcement. So the fact that we are approaching 2.8% means that there is a growing sentiment that rates aren't going to go down as much or very much further. And what are the articles saying out there? Are the news publications and the news outlets saying that rates are going down, or are they saying that rates are going up, or are they saying rates are staying steady? Well, the news publications are saying that they're widely anticipating the Bank of Canada to keep rates where they are at. So they're expecting the Bank of Canada to hold the key rate and to make an announcement that they are going to keep rates where they are at now. Now, I did lose my video feed with interest rate here. That is unfortunate. Let's see what we can do. All right. What's happening here? Interest rate. Let's see if we can turn you back on. Let's join you back. Okay, we're just joining interest rate back into the program. All right, there she is. So we're going to just try to feed her right now. If she eats the hay, I think rates are staying going up, actually, or down. And if she eats the lettuce, then the rates are going to stay the same. So we got some hay there. And let's put some lettuce there. Let's see which one she eats. Is she going to come out and eat the lettuce? Let's take a look at that. Give her a moment to make that prediction. We'll show her the two items that are available. Hay or lettuce. Are you hungry at all, little girl? I don't know if she's hungry right now, but we'll take a look at that in a moment there. So as we're waiting for that prediction, we have about 3 minutes left before the Bank of Canada does make its announcement. Oh, she's coming out to do something. What do you think? Want some hay, maybe? Nope. Again, thanks for joining me. My name is Joe Bladek. This is my pet interest rate. She joins me for these announcements here on Canadian Mortgage Weekly. Well, I've lost my video feed again here. And unfortunately, I won't be able to bring that back this time around. But she is picking the lettuce. She is going for it right now. She's just eating it all up here. And as we get into the actual announcement, which is happening in 2 more minutes, I just want to say that my prediction is that the Bank of Canada will not lower interest rates today. As much as I would love to see interest rates go lower, it's just not going to happen. Okay, she's just going for the lettuce right now. As you can see, my camera feed is frozen, but she is eating that lettuce here. So she may have correctly predicted this. We'll just see in just a moment here. All right, let's remove her. There we go. So as we get into the Bank of Canada actual announcement here, it's going to be released in about 1 more minute. Thanks again for joining me today. I haven't done one of these announcements in 1 or 2 now. I've missed the last few, but I'm trying to get back to these here. We Work Canadians. Canadian Mortgage Weekly was Canada's first video weekly mortgage news podcast in Canada. So we can strive to continue to do that. Interest rate announcement will be out in a second. I don't think rates are going down anymore. I think Bank of Canada, they may even start to raise rates next year. But right now, I think we're going to see rates hold steady. As Tiff Macklin mentions, probably things like uncertainty in the market. That's what a lot of articles also have been saying. They're intending the Bank of Canada to hold interest rates. They're talking about an extended pause. And there are some articles that are talking about a unexpected 2026. I did see some banks as well make an announcement that they think that rates are going up in 2026. National Bank being one of those lenders saying that rates will go up later in 2026. Once we do hear from Tiff Macklin here on the Bank of Canada interest rate announcement, we will see what's happening with how it's going to affect your lending products. Things like your lines of credit, your secured lines of credit, your variable rate mortgages, your adjustable rate mortgages, your fixed rate mortgages. Okay, we have an announcement, everybody. I'm so excited. The Bank of Canada has just released what's going on with interest rates, and it seems like the Bank of Canada has held its target rate, held no interest rate and increase and no interest rate decrease. So that is sort of like neutral news, more like a nothing burger. So let's just get into now what this means for all of our lending products and how this will affect you as the Canadian consumer. Okay. So essentially what it means when rates go down or up, there's a change in the amount of interest you pay, which can change the monthly or weekly payments on your accounts. However, in this case, there was no change, so there will be no changes going forward in terms of any minimum payments or any interest charged to your lines of credit or secured lines of credit or things like variable rate mortgages or adjustable rate mortgages. There will be no payments changing, no changes between interest and principal payments on your variable rate mortgages, no amortization changes. So really, it's a nothing news for this morning. Things go forward as normal. Interest rates just going for the lettuce right now. She is joining into that here. She's just going for it here. Let me see if I can bring her up on my thing here. Let's see if I can grab her. Okay. So there she is. She's just hanging out there. She's eating the lettuce. She's just eating it right up. You want another one? You want one there? No, she is giving me her butt right now. Doesn't like that very much. All right, she's just eating that lettuce. So let me see if I can show you guys. Nope, she doesn't like being picked up at all. Anyway, guys, thanks for joining me today for Canada's mortgage interest rate announcement. My name is Joe Bladek. I try to help clients get a good mortgage across Ontario, get good interest rates, secure them before they go up, and get them a lower interest rate where possible, get them a good mortgage. And if you're looking for a mortgage broker in Canada, I'm happy to help. As you know, if you're just joining me here today on Canada's interest rate announcement, we've seen no move, no change. And thanks again for joining me. I hope you guys have a great day. And thanks for watching Interest Rate, Help Predict Today's Interest Rate. If you are interested in joining on any future episodes, I look forward to seeing you next year on Canada's first interest rate announcement of 2026. We'll be doing that in January. Hope you have